Hello everyone, let's get started today. We're going to talk about market structure. So it's the basic market structure for us to understand, right? And about what the market is and how the market moves, right? So within the financial market, among the assets we trade, we have three types of structures, right? This PDF, I've already shared it with you in the chat, but I'm going to go over it with you here and we'll also see it in practice. But let's go. Within the market, we have three types of structures: bullish structure, bearish structure, and sideways structure. As soon as we can identify these structures, we can predict where the market intends to go. What would be the next movement? So within the bullish structure, what do we have? We have higher highs and higher lows. We have one high that's higher than the other and one low that's higher than the other. It marks the beginning of an upward trend line, which we learn about in basic price action. So, higher highs and higher lows, we have the initiation of a bullish structure. The opposite is true. Lower highs and lower lows characterize a bearish structure. We have a lower high than the previous one, so I'll have a lower low than the other. In other words, we have a bearish structure. And the sideways structure, it is formed when the market creates equal highs and lows. Don't catch me forming equal highs and lows. We call them equal levels, right? This is within basic price action, or what we call root price action. When we have this year, Ricardo, if you're someone who has already traded before learning about institutional analysis, then you probably know about support and resistance. So generally, support and resistance are marked in this way. It takes equal highs and lows and marks them. That's why 90% of the time we get it wrong, because above and below those areas, there's liquidity. But this will be it's a topic that we'll see later on, right? With that, right, that I just shared with you here. Now that the bullish structure is higher highs and higher lows, the bearish structure is lower highs and lower lows. We get there, right? In the more refined structure, right, that would be the structure of SMC, right? What we learn from the concepts of SMC, which would be the BoS and the CHoCH, we learn to characterize these structures through the BoS and the CHoCH, putting the names in place. And what would the BoS be? The BoS is the break of structure in a certain price area where the movement continues. The flow, that is, it's when the structure is broken, and even if it's broken, the price continues in the same direction. In other words, in a bullish structure, from the moment the market breaks that high in this area, we have the formation of a BoS, right? If the market continues the bullish flow and breaks again, we have a new formation of a BoS and the CHoCH, right? Here the bearish BoS is the same, it's the same thing. We have lower highs and lower lows. However, from the moment the price breaks the last low, we have the formation of the BoS, right? It's the market really phases for the back. It breaks the low again. So we have a new BoS because the market is continuing the flow. The CHoCH is the opposite of that. The CHoCH means a change in character. It's when the asset reverses its current trend. In other words, when a trend reversal occurs. So whenever we have a bullish trend and the market breaks the low that precedes the last high, when we have a bearish CHoCH, and the opposite is true. Here's an example. The market is in a bearish structure with lower highs and lower lows, forming new BoSes, meaning it's breaking the low. Once the price breaks the last high, we have the formation of a CHoCH. And this CHoCH can start a new upward movement into a new market structure. In the chart here, I put a drawn example, which it's much easier for you to understand when looking at this. What happens? The market started the movement from here. We started the movement from here and formed a peak. It formed a low, broke the last high. So we have a BoS. Let's suppose we have a bullish structure and we had this first BoS. The market continued forming a higher low, which is higher than the previous low. It broke again, and now we have a new BoS. The market formed a peak, made a higher low than the previous low. It broke again. We had a new BoS. From the moment The market broke that BoS. It didn't have the strength to support and break, creating a new BoS. So what happened? The market came and broke the last low. From the moment the market broke that last low, we had the formation of the CHoCH. From the moment the market made this CHoCH, it's showing us that the buying strength, right? It's decreasing. The market doesn't have the strength to hold this low, so we might start a new flow, right? In this case, it would be a bearish flow. The market made a pullback, right? And broke the low, forming what? A BoS. Why isn't it a shock? Because it would be a shock, right? If it were the last low of this bullish structure, right? Of this upward movement. Not here. Here's a low, right? That was formed after a downward impulse, a bearish impulse. In other words, the market made this impulse, formed a shock, made the correction, broke again. We have a BoS continuing the bearish flow. We had a new break, pullback, new break. The market tends to make a pullback. With the new drop, we're going to start breaking this top here. Oh, if the market comes to this area, breaks this area, we would have what? The formation of a shock, right? Is the market going to do this? We have the formation of a shock. It could start a bullish structure, right? From here, oh. That's how we read the structure in a more basic way. Okay. In the reading, in the professional SMC, which I will teach you later, you will learn to validate this structure, right? Because in basic SMC, based on price action, I would say, because today, if you open up anywhere, people will teach you SMC, but it's an SMC. Fake, let's put it that way, got it? It's an SMC based on price action and technical analysis, right? And what happens is that 90% of the market loses money and 90% of the market trade price action, trade technical analysis, right? So what is taught there, you will also learn with us from the moment the market breaks a structure. In this case, it broke the market. It leaves an order block, right? Or an inefficiency. So the market tends to fill either the order block or the inefficiency and continues. It broke again, forming a new order block or a new inefficiency, an FVG. Then the market comes and fills that area. Fill in that area of inefficiency or order block and continue. The market broke, creating a shock, and did the same thing. Left an inefficiency or an order block. Then the market tends to fill that area and continue. Here it's the same thing, tends to fill the area and continue. However, most of the time when you trade in practice in real life, and this order block or this inefficiency will be taken as liquidity because it's not a valid bottom or a valid top, okay, to trade that. I'll teach you more later. But keep in mind that whenever the market breaks a structure, it leaves us, right, an order block or an inefficiency, okay? And we're going to trade this order block or this inefficiency. So we're going to see it, right? In the next concepts, okay, mainly structure. Here is just the basic part of structure for you to understand, right? That the market it doesn't operate randomly, right? The market works in waves, in upward waves and downward waves, right? Where we have impulses and correction waves. So the market made the impulse, right? Because I want you to understand today here, the market made the correction, made the impulse, made the correction, made the correction. I made a correction, 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 I made a correction. What I want you to understand today is this, and put it into practice. You get to your chart and you're going to identify. Then you're going to get to the chart and you're going to identify the market. It made a correction, formed a box. We have a voice here in the market. It made a correction, made the impulse. We have a new voice here. If the market, right, in a more, looking at the HTF, it broke this top. We would have a shock if we refine the structure more. We see that the market broke this top, so we would have a shock here, right? It's just for you to understand even what you have to do, you have to take it, right? All this reading that I shared with you here, put it on your chart and practice it. For now, you're not going to make a decision based on this structure, right? You're not going to take a position based on this structure, but you already have to master it, right? The structure, understanding the movements that the market makes, impulse and correction. So that's it, folks. The basic reading of structure. Yeah, and there